Now that we know how to find the taxable income, we can calculate the income tax. In the U.S., we use what's called a graduated income tax rate. So for example, here are tax rate schedules from 2009. So if you're single, you're looking at Schedule X. Your taxable income on the first $8,350 is 10%. And between $8,350 to $33,950, you're charged 15%, and 25%, 28%, 33%, 35%. So the more you make, the higher your tax rate. Right? So if say you make $48,000 in a year as a single person, you're going to go down to the third line. You're between $33,950 and $82,250. See where it says the tax is $4,675 plus 25% of the amount over $33,950. So what that's telling you is that for the first $33,950, your total tax is $4,675. So now what's after that? So you take the $48,000 minus $33,950 and multiply it to the 25%, and then take that result and add it to $4,675. And then you'll see Schedule Y1 below that. That's married filing jointly or a qualifying widow or widower. And then there's tables for married filing separately and the head of household. And you use these the same way as you would the single table. So we're going to go ahead and look at an example here. Paul is single with no dependents with an AGI of $64,600. If he uses the standard deduction, how much tax does he owe? Remember, we're going to have to find the taxable income first, which was the AGI minus your deductions. So first, in a deduction for exemptions, he has no dependents, so he just has one exemption, times $3,650 for a total of $3,650. And now his taxable income will be $64,600 minus $3,650 minus $5,700 equals $55,250. You may be asking, where did that $5,700 come from? It came from the standard deduction amount. So he's a single taxpayer. He gets a standard deduction of $5,700. So now we have the taxable income. So to find the income tax, we're going to have to go to the income tax table. He's single, so we're using Schedule X. And his dollar amount will fall between the $33,950 and the $82,250. So that tells us that our tax is going to be $4,675 plus 25% of the amount over $33,950. So if we first find the amount over $33,950, it's $21,300. So our tax will be the $4,675 plus 25% of $21,300, which is $5,325 for a total of $10,000.